Hey, my name's Jason Nicholson and welcome to my YouTube channel. In this video, I've got some good news for those of you that have a mortgage, but unfortunately bad news for those of you that are savers. We've got a major update on the probability, the likelihood that the Bank of England will cut interest rates on the 8th of May. In this video, I'm going to talk about where's this come from? What are the market expectations? And does this mean good news for mortgage rates going forward? Or has this already been priced into today's rates? If you're new around here and you haven't done already, do make sure you subscribe to the channel over there and hit that bell notification. We're on the way to 41,000 subscribers now. And let's get some more views on this video. How do we do that, you ask? Simple. Smash like, tickle like, do something to the like button. That helps with the YouTube algorithm. And then share the video, WhatsApp it, email it, or Facebook message it to one of your friends or family that needs to know what's going on in the mortgage market right now. So, I've said this would happen a few times. If you listen to the videos on the content and you're a regular person around here. And what I was talking about was the fact that the markets will have to make a decision on what their expectations are for an interest rate cut on the 8th of May. So first off, it's the 8th of May that all eyes are on. That's the next Bank of England meeting. And what were the market expectations only 1 week ago? The expectations were 82% of those surveyed of economists felt that we would have a rate cut. That's changed quite drastically over the last few days, and that has gone all the way up to 100%. Now, if the Bank of England and the monetary policy members are thinking, that's not what we're going to be doing, we're likely to be holding rates or increasing rates, then they will start in the interviews that they have to discuss those kind of things. And this is exactly why we've got to 100% right now, because one of the monetary policy members, one of the members that in fact was in the last time we had a cut, they voted to hold rates. They've indicated that they feel that inflation is going to come down significantly faster. If not, we could also go into deflation. And that member is called Megan Green. And so Megan Green has been doing the rounds, doing her interviews over the last few days, and she's been asked a lot about the tariffs. What impact is Donald Trump's tariff war going to have on the UK? Well, Donald Trump today, he has been talking about potentially cutting the China tariffs down significantly. Maybe by the time you watch this, that's already happened because it's constantly changing. And the problem is that America and China, with the tariffs at the levels that they are, they're just not really doing much business at the moment. But China's still manufacturing all these goods that people want. And the fear is that they're going to dump it on Europe at a very low cost, which is good if you want to buy stuff, but that could cause deflation in the EU and in the UK because they can't sell that stuff to America. It just doesn't work. And so they want to get that stuff sold, and that's where they're likely to dump it. And that could cause deflation, according to Megan Green. I've actually heard other economists saying similar stuff earlier this year as well. So that's good that they're starting to do that. Now, because she's talking about deflation, and she was one of the people that was worried about inflation roaring back and causing lots of problems, and that's why she wanted interest rates held. Now it shows that what she's looking at here is that she feels that inflation isn't going to be as much of a problem, and we should in fact be looking at deflation. And that means that she's more likely to vote for a rate cut. At least that's what the market expectations are. So the markets were expecting the fact that we would have an 82% chance of a rate cut. Now it's gone all the way up to 100 just because of this interview. Now, this could change. Other people of the monetary policy could get interviewed and they might drop subtle hints as well on where they think things are going. But normally they're all on the same path, and they all in the interviews, I'm sure they have conversations prior and they're trying to hint at where things are going to go so the markets can be prepared and there's no real shock. Now, we've also had data from the IMF and they've downcast the UK expectations on the economy. They've also downgraded the American economy as well. So that indicates potential recessions or at least slower GDP, which will increase unemployment. And these are things that the Federal Reserve and the Bank of England are also considering. We've also got the fact that the Bank of England are currently at 4.5% on their interest rate, and the Americans are at 4.25%. So even with the spat with Donald Trump and Jerome Powell, the head of the Federal Reserve, we can still cut and still be fairly close to what the expectations are going forward. Now, the Bank of England is expected to cut on the 8th of May by 0.25%, taking us from here down to here, taking us from 4.5% down to 4.25%. What does that mean for your mortgage? Well, if you're on a tracker rate, which some of you are, and I know some people are considering going on tracker rates, then that will get cut straight away. Pretty much the next payment that you make should be on a lower rate. Now, there are tracker rates out there that are around half a percentage point above the base rate. So the best deals are around 5% on trackers at the moment. And so if you're on that, then you go down to 4.75%. You're moving in the right direction. So that's great for people like that. But what about everybody else? Well, we've had a lot of cuts this month. In fact, I did a video yesterday, which you can go and check out if you didn't see already, where 5 of the big 6 lenders have cut rates to below 4%. So they're already lower than where you sit there. Now, that's based off the fact that the markets feel rates are going to go down over the next year, and they get a rate called the SONIA swap rate. That's dropped over the last month, allowing lenders to cut rates towards you. Now, it's also down to the fact that the market is slow at the moment. The property market has slowed down because of the stamp duty increase. So the first quarter, we had 500,000 property transactions done. The next 9 months, we're only expecting another 500,000. So lenders are getting competitive and they're cutting rates in order to get your business. That's the whole point of this. So should we expect further rate cuts? Potentially, yes. I think when this rate cut happens, you'll see some lenders get in very quickly with their PR and they'll cut the rate on the lending that they've got by around 0.25%. That's what I think is the best case scenario here. So I think if you look at rates in around the 16th of May, you will start to see some lenders getting very close to that 3.5%, which will make a massive difference to people's affordability. Let me know what you think. Do you think the lenders are going to pass this cut on to mortgages as soon as they can? Do comment below, do smash like, do subscribe, and do check out all the other videos. But before you do that, do also check the fundamentals of property investing. We've got that on a flash sale for £20 at the moment. That will help you find properties below market value, teach you how to refurbish those properties at a profit, and it will also teach you the best cash flow strategies once you acquired that property. Is it going to be HMO, serviced accommodation, or something else? That's 20 quid, and that's because we've hit 40,000 subscribers, and that lasts to the end of the week. So do go and check that out in the description, and check out all the other content as well on the channel, including this video right here.